Hey people, I welcome you back to Caroline's Online Academy. And in this series of videos, we're solving previous year board examination questions from the chapter Accounting for Share Capital. I compiled them and classified them into different types of questions. And at this point, we're solving the 6-mark pro rata feature and reissue kind of questions that are asked. Now, they don't ask all the adjustments in every single exam, as I told you. For instance, in the previous problem, we saw pro rata premium with one shareholder defaulting. And the problem before that, we had pro rata. There was no premium, but two shareholders had defaulted. Likewise, in every question, they ask only a certain number of adjustments. Let's look at this question from compartment 2021. I would say this, I would call this as the easiest problem that was ever asked as a 6-mark question in board exam. Might be probably because the compartment 2021 attempt was just at the time COVID was beginning, that attempt in which COVID was had taken shape and children were studying from out of lockdown. And probably that is why they asked a very easy question in this paper. Let's see how it goes. Anurag Limited invited applications for issuing 1 lakh equity shares of rupees 10 each at a premium of 10%. The amount was payable as follows. On application, rupees 3 per share. On allotment, 3 per share, including premium. On first call, 2 per share. And on second and final call, balance. Applications for 1,50,000 shares were received. The directors decided to reject the applications for 50,000 shares and to refund the excess application money in full. Can you imagine? It's not even a pro rata allotment question. It is a full allotment question. It's so easy. Gopal holding 600 shares failed to pay the first call and second and final call. Pass necessary journal entries for the above transaction in the books of Anurag Ltd. Open calls in arrears account wherever necessary. So that it's the easiest question that they can ask by the children. There is no complication here. Let's go ahead and solve this one fast in the books of. Sometimes kids get confused when they ask easy questions. They might be like, "What? There is no forfeiture reissue." I've seen many times when I correct papers of children. I have seen children doing forfeiture and then reissue, even when the question is not asked for reissue. I don't know where they got the numbers for reissue from. And they're forfeiting shares when the question is not required them to forfeit the shares. So it's very important that you look at the question properly and find out what exactly they are looking for. So in the books of Anurag Limited, journal, have serial number, date, particulars, ledger folio, debit, credit. Alright, so the first journal entry is receiving application money, as we all know. The journal entry is bank account debit to equity share application. And the amount is, my dear children, it's 1,50,000 applications have been received, and along with every application, we receive 3 per share, and therefore 1,50,000 into 4,50,000. Second journal entry would be to allot shares. So what do? We debit the equity share application account completely. And we transfer the application money receivable on the allotted shares to the equity share capital account. If there was any calls in advance, or if we are adjusting against share allotment, the excess application money, if it is adjusted against share allotment, and that will go to equity share allotment account. But in this question, they have mentioned that you got to refund the excess application money. The directors decided to reject applications for 50,000 shares, and that was the excess application because we are allotting 1 lakh shares. We received 1,50,000 applications, so 50,000 is the excess application. all the excess applications were rejected and the excess application money was to be refunded in full. So when we are refunding excess application money, bank account will be credited. So this will be debited with the full amount. This number of shares allotted into application money receivable per share, which is 3 rupees here, and bank will be whatever we are refunding, which is 50,000 applications have been refunded into 3 rupees per share, which is one application shares allotted. What we need to do next is make allotment money due. There is premium involved in allotment. See, 3 per share, including premium. Premium is 10%. 10% of 10 rupees is 1 rupee. Understood? So premium is 10%. Including share allotment and debit to equity share capital account. And as this premium portion will be credited to securities. Equity share allotment is 3 into 1 lakh shares, and as 1 rupee is premium, that will be 1 lakh into 1, and the remaining happens to be capital portion, so 2 into 1 lakh capitals. Allotment money, alright. And then we have to receive the allotment money. There is no calls and arrears in allotment money, therefore we can completely receive it. Gopal holding 600 shares failed to pay the first and second call. So allotment he has paid. There is no calls and arrears there. So journal entry for receiving allotment money when there is no calls and arrears is bank account debit to equity share allotment. And allotment money is 3 lakh and we receive the entire. Understood or not, my dear children? And then we're going to make the first call due, equity share first call account debit to equity share capital account. There is no premium here. Share first call made due. Amount is how much, my dear children? It's 2 rupees per share. Okay. So you're making it due on 1 lakh shares, so 2 into 1 lakh, which is 2 lakh. And the next journal entry is receiving first call money. The journal entry would be bank account debit to equity share first call account. Okay, sorry. There is calls and arrears in this. Gopal did not pay, so when there is calls and arrears account will also be debited. So calls and arrears account also debited. What do we do in such situations? First, we credit the entire amount that we made due on the call to the call account, and then we compute the calls and arrears. Calls and arrears is what, my dear children? Gopal holding 600 shares did not pay first call, and there is no excess application money. So the computation is very straightforward because the number of shares into the application money receivable per share. I'm sorry, first call money receivable per share. The call money receivable in that call. That is 2 rupees. So the calls and arrears is 1,200. And hence this will be 1,98,800. What happens next, my dear children? We make the first call due and receive the first call money. Again, we make it due for First, we have to determine the amount for second call. Journal entries are going to be the same. We are making second call due and receiving second call money, and we have calls in receiving second call too. Therefore, the journal entries are going to be the same. So, the issue price of the shares in this question is 11. So, what we have received so far is 3 plus 3 plus 2, and therefore, in second call, we'll have to receive 3. Understood or not, understood? So, making it due, it will be number of shares allotted into the call money, which is 3. And then when you're receiving, credit the entire amount here, calculate the calls in arrears, 600 shares into 3 rupees. Gopal has 600 shares and he didn't pay the second call money, so that is the amount of calls in arrears. 600 to 3, which is 1800, and this will be 3 lakh numbers. Can you believe it, my dear children, amongst all the difficult questions that were asked in all the attempts in 2021 compartment, they asked this question, and that is because this COVID batch, first COVID batch. Alright, children, with this we come to the end of this video. I kindly request you to like, share, subscribe to the channel so I can grow big. That's so selfish of me, I know. But if I grow big, I'll be able to upload better videos, better quality, and no, actually, I'm selfish. I just want the channel to grow. It'll be useful for me and for all the time that I'm spending. And if it is useful for you, then you got it, like, share. Alright, if you don't find it useful, if you find it boring, if you don't agree with the explanation, then don't bother liking, sharing, subscribing, whatever. But if you have doubts, do comment so that I can solve those doubts for you. Alright, kids, take care, have fun, bye. See you with another video, another question, calling for share capital from complete board examination question papers. Bye.